What's going on? It's your boy Zakhelezi. I'm back with another new YouTube video. So now, before I get into the video, don't forget to like, subscribe, comment, and share the video, and don't forget to hit the notification bell so that you know next time when I drop a new video you get notified. So today I'm going to focus on currency pairs. We are going to do a market breakdown for currency pairs. So now let's see what do we have. So first thing first, we are going to look at the DXY. Those who don't know DXY is a dollar index. It's a dollar index. So to see like if the dollar is going to have a strength or is it the dollar's going to be weakened. So yeah, first thing first, you hack your key levels. So like this is our first one. Remember, it's a weekly time frame. So this one, it will be the second key level. So now when you look at on our left hand side, we had an impulse. Now we are inside a correction phase. So like looking at this, we might have a push to the downside until here to this level. So like let's see what happens. So on this pair, I'll go to 2 hours and see what we find. And remember, you have to keep your trading simple so that even people who don't know how to trade can clearly see or can clearly spot what's happening. So now let me try and draw my structures. And when you draw your structures, you don't force anything. You don't force anything. Okay, like so like yes sir. So now like this was our like the previous structure. And remember, each time when the market passes this like as you can see, like we are above our a red line. So what might happen now is that like the people who are moving the market might be tripping people who are looking for buy opportunities, like something like this. There are people who are going to wait for the market to calm down and retest this level and go up. So like there are people who are trading like that. So for us, when we have a situation like this, we will wait for the market to come back and break this red line, and after give us a correction and go down. So for us, we are going to look for something like this rather than looking for break and retest. So there are some people who are going to be trapped trading break and retest. So meaning like they are going to be trapped so that they're being caught on the wrong side of the market. This is what I'm talking about. Break and retest. So like for us, we are going to wait for something opposite. We're waiting for the market to come, push down, start giving us a correction, so that we push to the downside. So we are going to wait for something like this on the XY. So yes, so now we have an idea of what you are going to look at on the dollar index. For now, let's go to Euro USD. On Euro USD, we go to weekly, and we mark our levels. So like this is the first one, This is the lower low, and this is the higher high that we're currently having. And as you can see, the market has been what? The market, it's been like, now we are inside of what? Correction. Here's an impulse, then this is a what? This is a correction. So we are looking for buy opportunity, the market to come up here, then push to the downside to continue selling for a long term. So let's go to let's go to the daily time frame. It's 1 day, so yeah, daily time frame. So on a daily time frame, we know like each time when the market reaches like this level, it's going to shoot up. It's going to shoot up to come, like it's going to shoot up to come to test this level before going down. So like let's see what we find on this pair. We might find what's this pair? We might find a falling wedge, giving us a confirmation that the market is going down. So we have a structure like this. So it's either we wait for the market to push down, to come here before going up. Remember, this is our first touch, this is our second touch. So now we are waiting for the market to give us what? To give us a third touch to the upside. So like this give us an idea that the dollar might push up until a certain level and start falling. So let's go to what? Let me go to 2 hours. Let me go to 2 hours and see what do we find. So previously on 2 hours, we were having something like this. Clearly we were having something like this, just that the market didn't push up to give us sorry about that. Just that the market didn't push up to give us what? To give us another touch before going down. So now the market, what's going to happen is that like you can see it's impulse, correction, and impulse. So the market will start doing correcting. After correcting, we will be having a impulsive move to the downside. And now this red line represent the 90% rule of this structure. Let me just make this thing look nice. The 90% rule, the red line represents the 90% rule of this structure. So now what might happen is the market might start rejecting here, because like normally what really happens on 90% rule of the structure, the market might reject here and start shooting up. So now we have an idea that, because like we are looking for buy opportunities, we are going to wait for at least the market to come up here. When it starts rejecting, we know automatically we are going to push to the upside, or we wait for the market to break the 90% rule of the structure, then come down here and give us a what? And come down here and give us a dead touch to the upside. So you might wait for something like this. so we might wait for something like this, but we can take sell opportunities. We can take sell opportunities. So like we have to wait for the market to start on giving us like more correction, like start giving us more correction after having correction, because like we'll be having continuation patterns. Then we might take a short sale. When we are here, we might take a short sale when we are here. We might take a short sale before going up, so we might wait for something like this for a short sale, then something like this for a buy, like a long buy or a bigger buy. So let's look at another pair. So like another pair, it's going to be Nzdusd USD. So now we know like the dollar, it's gaining, so like we might expect you might expect this pair to push down also. So let me go to the weekly. So when I go to the weekly, you spot your highs and the lows. So I can say like this is my high, and we have this low here, and we have another low here. But for now, let's focus on these two, because like it's a weekly. So let me go to the daily time frame. To the daily time frame. So again, this looks like what this looks like a cup pattern. So now we know like this looks like a cup pattern. So now we know like we are going to come and test this and come and test this low right here. Come and test this low right here. To the downside. So there might be people who will be looking for buy opportunities, having a structure like this. And look for buy opportunities. But as for me, when I have structure like this, I know there might be people who will be having a structure like this. Like for us, let's see what do we find. But for a longer term, like we have to look for what? We have to look for sell opportunities. We have to look for sell opportunities. Sell opportunities. Remember, you don't have to force anything when you do your analysis. So now we might have a so we have a structure like this. So here's our structure. So for buy opportunities, you have to wait for the market to come down here and give us a touch to the upside before going away. Before, like, it might be come here, give us a touch, and come back here. We have we have 1, 2, 3 touches. Then like we are going to sell. So something like this. Like for now, we know we don't force anything. Let's go to lower time frames and see what's Gucci. 2 hours. 2 hours. Let me just fix my trend line. And again, we were having a bearish structure. We were having a bearish structure. So like it is important to always like look on your left hand side to see like what happened previously, so that you have an idea of what's going to happen next. You have an idea of knowing what's going to happen next. So now this is our 90% rule of the structure, the 90% rule of our ascending structure. So when we are in a situation like this, we don't force anything. There are some people who might be making things like this to look for buy opportunities. I'm just making an example very quickly. There are some people who might come here and look for buy opportunities to the upside, something like this. So for us, we know what's going to happen. So after every impulse there's a correction. So here's a word: impulse. So let's go to 1 hour. So now we know we are having an impulse. So we are going to wait. It's an impulse. So we are going to wait for the market to do what? For the market to start correcting and give us a pattern. So for us on this pair, we'll wait for the market to give us a correction. After having a correction, that's when like we are going to enter for a short sale until the market reaches our 90% rule. 90% rule of our ascending. No, it's not ascending, descending structure. Or we can wait until the market comes here and give us a touch before going up. So like this one, it's more like Euro USD. So now let's look at another pair. Let me just zoom out just to see if I'm still making proper things. Let me see if I'm still making proper things. So the key is to not be in the wrong side of the market or being caught up on the wrong side of the market. Now let's go to last but not least, our last pair, Euro NZD. It's weekly. Euro NZD. Euro NZD on weekly time frame. Again, you know the vibes. You have to always stick to the basics. So here is our low for this one this year, and here it was our low. But this is no longer our low, and here we have another low. But for now, let's focus on this proper one. It's a weekly. So this is our high. So let's go to daily time frame to see what's happening. It's a daily. Let's go to the daily and see what's happening. So on a daily, let's see what's happening. Starts having something like this. On a daily, they are having a bullish channel. So we are having a bullish channel. So we have first touch, second touch, and it was our third touch. So this is going to be our 90% rule of the biggest of our structure. Fine. So now what's going to happen is that we know like we are inside a bullish structure. So we are going to wait. So what we expect from this pair is that we had an impulsive move. This part right here is a correction, and we are expecting another impulse. We might have a push to the downside before breaking the trend line and break the trend line and start having corrections, and so that it start moving forward to the upside. So remember, after each and every impulse, there is a correction. So let's go to 2 hours to see what's Gucci. So this now right here, this is our 2 hours. This is our 2 hours. After every impulse, there's a correction. Here, after every impulse, there's a correction. Let me just fix this very fast. So like as you can see, this was our impulse. Now we are inside correction. So what's going to happen is that like we have to wait for the market to come down here, to push to the downside and start giving us something like this, to start pushing to the downside before going up. We are having something like this. Let me go to 1 hour and see what's happening. So for me, I suggest like on this one, we wait for the market to give us that touch. Remember, 1 2 3. It's 1 2 3, then we are up. And this is a continuation pattern for the bullish momentum. This is a continuation pattern for the bullish momentum. So you're expecting something like this on Euro NZD. So we're expecting something like this on Euro NZD. So like I guess like I'm done with the currency pairs. I'm done breaking down the currency pairs. So like don't forget to like, subscribe, hit the notification bell so that you know next time when I drop a new video you get notified. And on Wednesday we'll come back and watch and have a market review on these pairs that I did with you guys, so that we see like what's happening. I'll update you all and stuff. So like it's your boys like Eurnzd, the one and only, the forex trader, and I'm done with the video. So like yes sir, thank you for tuning in.